Today is Wednesday. We are going to make a review of Wednesday trading session, and starting off from the new day opening gap, opening in Tuesday 6 p.m. That's where the futures new day opens for Wednesday. We have price coming down during after equities close hours. Before 5 p.m., it comes down into this 1 hour inversion fair value gap of this displacement move higher. We can see it clearly over here. We have again tap into weekly order block, tap into this daily new day opening gap that we can see over here as well. And we have price moving higher, changing the state of delivery over here. Retracement, move higher, retracement, and we're currently in this retracement over here. Price does bounce back between 5 and 6, leaving a big new day opening gap. And after it opens at 6, it retraces lower into deep discount of gap below 50%, finds support again in the 1 hour, and discount moves higher, and it keeps repricing higher, challenging and disrespecting this bearish order block, challenging and disrespecting this, or if you want to count better in terms of market structure, it's best to look at the 1 hour and look where the bodies are thicker, and we have a low, a higher high, a low with bodies, and then a higher high disrespecting this down close candle. So we can count this as a breaker block, a bearish breaker block, to which price gravitates and it finds temporary resistance, filling this bearish fair value gap, and only driving lower without breaking structure over here. We see this low is not getting taken. It's only rebalancing here, and it drives up higher into midnight. So we have Asia expansion higher. We have midnight opening range with a 15-minute gap that's formed over here, into which price finds support. We see wick through and displacement higher, and it keeps moving higher until 2 a.m. as it opens lower, finds support in this gap. London officially opens at 2. We have another leg higher, taking this previous high, going for rejection block over here. And in the 1 hour, it is also the upper part of this rejection block over here. So we are deep into the rejection block. That means that sooner or later it will be violated, and we are engineering buy-side liquidity in the higher time frame. In the smaller time frame, 15-minute, we do see price moving lower with conviction, breaking this low over here with bodies and with wicks, breaks lower with thick bodies. Me changing the state of delivery in the 15-minute, creating a bearish order block and a bearish breaker block. And in terms of expectations to where price can fall, we can measure the breaker block and project standard deviations. I would aim for at least 1.5 to 2 or 2.5 for regular standard deviations, as we are, I wouldn't say bearish, neither bullish. We are unbiased. We want to see what price does based on previous days analysis. So I would simply expect some form of retracement over here, and we can consider this a change in the state of delivery as well. meaning that if we change delivery for the upside and we're now bullish, we expect this movement here to simply be a retracement into discount of this range. And indeed, price, as soon as it falls into discount below 50%, it finds strong support higher, and this happens at a key time of the day, namely at 9:30. Again, 50% is here. We have equal lows. We see one low, one low, one low, one low over here, equal lows waiting to get swept. We see this wick down, doesn't take this low, very suspicious low, and this over here can frighten some people, but we do still expect these lows to get rated before move higher, and indeed it does do so. Price opens at 9:30, initially it moves higher, takes this buy side liquidity, and then drops lower. And it drops into, again, discount of range and takes liquidity here, respecting this order block. And I want to see how price reacts in the smaller time frame. So again, in the 15-minute, we are retracing from London, and we are now starting in New York. And I want to see how price reacts in the smaller time frame. We have big wick down and big wick up. We have change of the state of delivery here, and this is confirmed by consecutive big up close candles. 1, 2, 3, 4, indecisive 5. This is purely algorithmic movement, and in this time I also want to see which gaps are being respected and which ones are being disrespected. Meaning we have a bearish fair value gap that's being disrespected. We have a bearish fair value gap again up to the upside that's being disrespected. And then as it moves through it, it creates inversion that offers support to move higher into another bearish fair value gap that gets initially respected and then disrespected. And at the same time, this movement over here is low, high, higher low, higher high, lower low, breaking structure, making this a bearish order block. And making this a bearish breaker. To which price initially, of course, it does react, but this disrespect higher is the confirmation that this is not offering too much of a resistance, and price indeed wants to move higher. But even though I still want to wait for price to come up this high over here to offer more conviction, because sometimes it can be so manipulating and choppy that it will kick us out if we try to enter down here. And as price comes up here, it changes the state of delivery once again. We do see price getting rebalance over here. We have rebalance over here. We have this fair value gap left open, and I do want to see it open, and this one left open too. I can expect price to come down below this fair value gap to rebalance this order block, but since we're so high up already, I can only assume that this 1 minute fair value gap can offer the needed support and possible entry. I want to see the time of the day. Right now it's 10:04 at this moment right here. I want to classify the range of New York Open between 9:30 and 10. And I want to classify the 15-minute fair value gap if there is one. There isn't. 5-minute. No. 3-minute. There is one right here. 3-minute inversion. that does find support. So I have the inversion, initially the fair value gap that's bearish. I want to see how it reacts. Will we respect it and move lower, or will we disrespect it and move higher? We do disrespect it, so I anticipate higher prices. And as a reminder again, I want to identify in the New York opening range, I want to identify the gaps starting from the 15-minute, and I want to observe how they react. And I purely use them as an observing factor, not as an entry factor. After I've observed and have come up to a conviction, or I have a directional bias, I can then now wait to frame an entry. And I have again changed the state of delivery up here. In the 3-minute, and we do have order block created, to which price wicks down. So at this moment right here, since we do have bullish bias confirmed, we do have inversion over here offering support in this small wick. We do have displacement higher, changing the state here and here with close above. This retracement down here, we can assume as entry. And even though in the 1-minute it does look like it's gonna keep dropping because it's so thick and black. Well, that sounded strange, but it's just bearish. And I want to put the stop loss under the low that reacted from the inversion, because I don't want to see this inversion getting retested again. If it does get retested, I want to see how it reacts. I don't want to see it drop below its midpoint. And if it does drop and reacts from here and moves up higher, I want to frame an entry again. And we do have the entry at 10:04. And we want to aim for first off this bearish gap. See how price reacts to it. Maybe move a contract or close a contract there. This high, the 7 a.m. high, and ultimately the London session buy side liquidity. This mitigation block over here already rebalanced price. We see price getting this buy side in small time frame, but in the overall move we do have resistance, and this inversion fair value gap did keep price at bay, and I do want to see this inversion get violated when we're in the long. We have very large wicks. We see the first target getting hit, contract off. We do see this bearish fair value gap getting respected, and we have that confirmation in the 1-minute as price changes the state of delivery. Let me delete these. Where does it do so? Over here. So we have a low, high, low, higher high, lower low with strong bodies. Fair value gap created, change of state of delivery, bearish order block, goes higher, entry short. If you were to see it, move lower. Since we're long, right here as price moves lower and in this retracement, I want to put the stop loss up here and close the trade immediately. With little profit, of course, we haven't reached higher targets, but that is how I would manage the trade in the moment. Would I enter a short? Probably, but I wouldn't advocate for it because we have built a higher time frame bullish narrative, and switching instantly could be possible, but it's very hard to fall into that idea because we have so much liquidity being built, and it is simply risky because we have so far only bullish momentum, and I would simply avoid it. You could do it, one could do it, but I would just, avoid it. And where price comes down to is this previous inversion, and I want to see how this fair value gap acts. Not that, actually, I want to treat that area as inversion over here. The 1 minute. Let me check if there's any on the 3 minute, 2 minute. Alright, 2 minute has an inversion here, and a fair value gap with an order block here, and 1 minute has an order block up here. So I definitely want to see this area find some support. If we are truly bullish and we are simply deeply retracing, because of course natural reaction from this bearish fair value gap. Now if we are truly bullish, I want to see this engineered hill here. I want to see it violated with strength to the upside, changing the state of delivery over here, and over here as well. I'll go up here, creating a market structure shift. Price does found strong support in this 2 minute inversion. Yeah, I believe it was a 2 minute inversion fair value gap, and this place is higher, changing the state here and changing the state here. Entry can be done right here as it does move, or if you want to wait for it to move higher, you can enter here, or you can wait for retracement lower. In the 5 minute, we have order block here. You can wait for retracement to that. Let's delete this. And since we found support in inversion 2 minutes, we will drop into the time frame and see for entries there. We have a gap left here that we can possibly see price react from. It does drop that deep, and now I can, with conviction, we dropped so deep into the 1 minute fair value gap 2. If I see a change of state of delivery in the 1 minute, I want to enter it there, and I do see one right here, because I don't expect price to fall even lower, and if it does so, it's simply not bullish. So I enter again. I would aim to challenge this high again, because this bearish order block got rebalanced here and rebalanced here, so I don't expect it to find strong resistance. And I want to aim again for the high and possibly target, because I don't want to see this gap offer more resistance. If it does so, I will manage it just as I did here and close it early. But as of now, I want to enter long right here. I'll put it stop loss below and take profit up here. Target London high. See price moving, sharp drop lower, changing the state of delivery, taken out of the game again. Notice that both these entries were taken either after 10 or this was at 11. So no entry was taken between the macro 10 and 11, where we could possibly see clear gaps. what price end up doing. So at this point right here, we have two losses. We normally I would just refrain from trading again, or if I had deep conviction, I would simply try to re-enter again. And price does manipulate again lower here. Bodies respect this inversion, especially in the 5 minute and in the actually to the dot, to the 3 minute. No, the gap was a 2 minute, right? Yeah, and 2 minute bodies respected. We have changed the state again here, retracement, movement higher. Entry can be done again here. Aiming for target. And does it reach for it? It does, to the dot. Shit. Let me check. So this high is 102.974 and this high is 102.973.3. That's a big lesson right there, to simply take profits a bit below target, because it can create double tops like this and simply reject lower. And this fair value gap that was here before got repriced fully through it, and this retracement wouldn't bother me because I know that if it went through it, challenging this rejection and this inversion, it will sooner or later go for higher targets. And this inversion still offers resistance here, although slightly, but we do have then price moving. Another element I want to keep in mind is the New York opening range gap. The first one being this one. I want to see how it moves and how it offers supports and resistance throughout the day, and as it does here. So again, if we over here in this entry at 11, we would simply, I don't think we would be getting any profits because it was too short, but entering higher, some profits would be taken over here, maybe in this drop and the retracement higher here. But considering the time of the day, this drop, it happens between 2 and 3. Retracement to fair value gap is at 201. Moves lower, aiming for this sell side, and even lower prices. New York opening range, sell side. And then we have sharp movement higher. This is actually pretty, such hard conditions to trade, to be honest. Anyone who tells you that they've predicted all of this, it's full of bullshit. Sorry for the language, but it's true. Anyway, price moves at 240 higher, taking London high, equal highs. And this move, it is actually anticipated, but not so fast and quick, because we have set equal highs, London and New York, which are so suspicious that you can't miss it. Price moves again, challenging this new day opening gap, filling it to the point, to the full, rejecting slightly, and then aiming for the new week opening gap, which we were looking for yesterday, rejecting from it. And time of the day is now 16:30. Equities have closed. Futures will be staying open until 5, and then new day will start. And in the daily time frame, it looks like this as of now. This is Thursday, today, Asia moving. We have rejection block from Friday being challenged right now. I want to measure its quadrants. We're in the lower quadrant aiming for the upper lower, and I want to see how it reacts to the midpoint of it. Definitely pretty bullish, considering that we only moved from the lower quadrant of the rejection block here, and now we're changing the state of delivery. I want to see how Thursday closes, but it's definitely a good sign for the weekly and the monthly to close up. So higher time frame is supporting higher prices. In terms of IBDA, if we refer to December, we have the 20-day IBDA in December that has created a high and has created a low over here. We see both those levels rated in the 40-day IBDA December and 20-day IBDA January, with this low first and then high. And then now we're entering into 60-day IBDA December and 40-day IBDA January. So we have the first 20 days movement lower. We have then movement lower, and we have a change of the state of delivery. So we can assume that we are now in the first month of this new algorithmic movement that can last 2 to 3 months. Meaning that the next 20 days, so 60-day IBDA and 40-day to 60-day January, can be bullish, moving higher. That concludes today's session. I hope I was as clear as I could. I wasn't able to come earlier to the charts, but we conclude today's price. Again, yes, we might have suffered 2 losses, but this is what the reality of trading is. And it is also a reminder of simply not taking every trade that you see simply because they're information forming. And yes, the model might, the characteristics and the protocol might have taken place, but that still doesn't mean that it will unfold as we wish. And furthermore, another lesson is to simply let price action unfold. And yes, we see it dropping here, retracement, but it doesn't mean that it will have a sharp movement higher as it did here. We naturally expect that because we see this sharp movement and we expect continuation because of the natural emotional excitement of the brain, and you're simply excited. And price, what it does instead, it simply consolidates, being choppy, moving too deep and retracing too low before moving again higher, retracing higher, retracing higher, and so on. Another factor I want to consider is this lower here that got rated was an 8 p.m. low, which is a very key time of Asia, and it's not coincident that price stopped here. What is also not coincidence is that it stopped on this order block low up, which is, I believe, it's a 15-minute order block. Yeah. It's a 15-minute order block. That price found support, and in the 1 minute we can frame a very nice entry coupled with SMT with Ethereum. And I want to confirm that again over here. This is okay. This is low. That is set lower low in Ethereum, and we have a higher low over here. Then a lower low in Ethereum and a higher high in Bitcoin. So that confirms the SMT. In Bitcoin, we do have model 2. We don't have model 1, meaning sweep of liquidity, displacement higher. We have model 2, which is failure swing. It fails to take liquidity, but the opposite asset, Ethereum, does do so. And we can use it as SMT. And displacement higher, change of state of delivery. Retracement to order block, and also to fair value gap, and also this order block deep, and movement higher. Entry can be framed here if you want bigger stop loss, or also here smaller stop loss. Aiming for the targets, easy, nice money. But yeah, it depends on the eye. It depends what kind of trader you are. You could have easily gotten this short again. Aiming for 1 to 2. Easy, nice little money, nice doubling of money, and you could be done for the day. So it depends on the risk factors, how much you're trading, how much you want to make, your tolerance, your time, everything. And again, it's a very objective analysis, but it's a very subjective execution and implementation of ideas. So that's it for today. Be safe. Yeah.